Hi everybody, welcome back to the Financial Thing Thursday evening live stream, coming to you from the United States of America tonight, or for you tonight, for me this afternoon. Haven't been able to make it back to the UK yet, but we'll see what happens with the coronavirus. Thanks everybody who's here today and this evening, wherever you are. If you're watching this in the future, hope you get tons of value. We're here every Thursday at 2:30 US Eastern Time and 7:30 in the UK. We have a lot to cover tonight. We're going to be talking about what's going on in the Collateral administration, what's going on in the House Crowd administration, what's going on in some general peer-to-peer lending news. We've had a rough few days in the stock market, so I'm going to show you what's going on in the Trading 212 portfolio and how that is absolutely getting smashed, not in a good way, this week, and what I'm doing to try to protect the capital and some possible opportunities within that portfolio. We're going to be talking about what's going on in some major big news this week in the U.S. economy, which I know most people listening are in the UK, but as I've always said, what happens in the U.S. economy tends to really impact what goes on in the world economies, especially Europe and the UK. So it's really important to pay attention to things as they're released. So we had a couple of news stories that were very, very interesting, kind of a little bit shocking to me. And we're going to do some cryptocurrency. Crypto's still getting absolutely hammered at the moment by those fluctuations, sort of trading sideways. We've seen some coins in the negative double digits this week. Again, under a lot of pressure, but not surprised. It's going to continue for a while. So for everybody who is invested in crypto or is interested in that, definitely you want to pay attention to what's going on right now. There are some really good buying opportunities in the right coins, and there are only a few that I would recommend taking a look at, but particularly Bitcoin mainly as a very long-term investment. I'll give you some news attached to the U.S. economy as to why we should be paying attention to Bitcoin, and also a news report from one of the central banks, which was very, very interesting this week. So have a quick drink. We'll say hi to everybody. If you can, hit the thumbs up, subscribe to the YouTube channel if you haven't, and if you have a question, we'll do a Q&A at the end, or leave comments in the chat. I'll be happy to answer anything that you have questions about. Of course, not financial advice, all my own opinions. Hi, Debbie, in in the Cayman Islands. Got Alan Toombs and good old not so sunny Basingstoke, Steve Manton in Solihull, Paul in Kenilworth, Philip in Milton Keynes, John Morgan, sunny Swindon, Tony in sunny Somerset. Try saying that when you've had a few beers, right? Sunny Somerset. Good evening to Stephen Green in Southport, Stephen Hale in Nottingham, Colin Perry in the Peak District, Peter is here in Leatherhead. Nice to see you, Peter. Alan Lomas in Chesterfield and glowing. It's really nice that you're glowing. It's a nice positive word. I like that. John Day in Clayton Bay, Scarborough up in the north. Sparkling. Okay. I like these descriptive words for the weather today. Aki Chap, of course, in Accrington. Mem Furter is here. Nice to see you, Mem. How are you? Mark Mason in humid Gibraltar. Wow, very nice. Are you on holiday, or is that where you hide from the tax man? Mark Burnett in Scotland. George Batchelor is here from Bridlington. Yeah, welcome to everybody. And we are just going to get right into it. Oh, and Annabelle, of course, is here from Spain, as always. I learned a new Spanish word this week, escúchame, which means listen to me. So I'm studying up on my Spanish. And Mem is in dull London. Sorry, London is dull. Let's get right into the news. And if you haven't been to the Financial Thing website recently, go ahead and I'm always updating articles. You can see where I invest here. I break that down. We're putting money in stocks right now in cryptocurrency. You can see all of that in the Where I Invest link. And of course, all the reviews are there. And I always update this article about the best tracker funds, what's going on with that. Cufflink's review has been updated, as in LoanPad, LendingWorks' review, and then I put the videos here for the Trading 212 portfolio, which I'll be doing an update probably on Friday to that, even though it's a bit of a sad state of affairs what's going on there. Anyway, let's get to this house crowd. This was sent out this week, and again, this really amplifies the problems with that it goes through when we go through an administration of these peer-to-peer companies. But this was an update dated 12th of July from Quantuma. It says, since the appointment of the joint administrators, we have found out that the house crowd operated with an environment of poor record keeping and documentation, with no formal loan management system in place, which is a piece of software that tracks and manages loans automatically. Without such a system, the house crowd relied heavily on manual organization of records with the resulting opportunity for errors. As a result, we have encountered significant challenges in trying to establish aspects of the house crowd's investor activity in respect of the deployment and tracking of funds invested via various products offered by the house crowd, specifically Auto Invest and ISA money. An exercise has been undertaken to try and understand these positions with the Auto Invest and ISA monies, and to establish where and when these monies have been invested. Yeah, basically, this is really bad. You know, this is saying that they really don't understand the full picture of money that had been invested in the auto product and in ISAs, and where that money has been deployed. So this just goes to show you more and more dirt that gets uncovered by these administrators, and things that have not been done correctly behind closed doors, which should have been done correctly. And the other thing is that it's going to increase administration costs, because the more they have to dig through missing information, the hours accumulate, and it ends up costing the general administration more money, ends up killing investors on what they're able to get repaid. So very, very, very disappointing that the house crowd didn't have something in place to really track this accurately, because now there's going to be questions of what money is where, and this could be a big issue in the future, but we'll keep an eye on that. And this is going to result obviously in a delay of returning funds to investors, because if they don't know who's supposed to get what, then they obviously can't really repay investors. So yeah, not good on that. Also this week we had a 8th of July a Collateral update for any of you old school investors like me that was invested through Collateral, one of the very early peer-to-peer lenders that I put my money in when I first started this, through a lack of, really just didn't know what I was doing back in 2015. The tin looked very shiny, but the ingredients were a little bit poo. They have put out a administrator's report, and you can see here some of the fees that have been racked up, £134,000 in professional fees and expenses. But some of the interesting things to note here were some of the loans that have actually been recovered without enforcement. So if you can see the numbers here, 210,000 principal, 212,000 recovered, 105,000 principal, 120,000 recovered, which on paper doesn't look bad. I mean, they're recovering amounts that are actually a little bit greater, in some cases a lot greater, than the actual principal of the loan. There are some cases, obviously, where quite a significant recovery was made. So principal loan here, 595,000 and 720,000 recovered. So that is good news. And then you have one here for 303,000, where only 212,000 was recovered. But in the total, and again, this is just loans that have been realized, there are more loans that haven't, that are in collections. We've had £2.2 million recovered before costs, of a total of 2,075,000. So a little bit over 10% positive on those. But now if we look down here, there is a couple of other loans that have been realized here, which is a good thing. Again, 325,000 recovered 362 until we get down to these two, which are a lot ouch. 935,000 principal loan, 440,000 recovered. That's way over a 50% loss on that, and that's before costs, so it'll be even more than that. And then you got this one here in Blackburn, which is 1.4 million, only 800,000 recovered. And down here, the total of these, 3.5 million principal loan, only 2.2 million pounds recovered. So this is where investors like myself are going to see principal and capital losses on these loans. Again, just a problem. And then uncompleted transactions on these loans down here, which, you know, this Bolton loan is a big one, 5.1 million. Then we got a 1.6 million, 1.1 million. Yeah, there's some outstanding loans that deals have not been able to do. There is some money in the accounts in cash, 383,000, 429,000 that have been recovered. But there is a discrepancy between the balance held in the client account and the company's records. So a lot of discrepancies in this administration report that the administrators have not been able to really figure out why there's these discrepancies, because the owners of the company have not been able to tell them why. So question being, you know, what has been going on in the background, where there would be discrepancies that the administrators would find out. It looks like it's going to be some time before investors would see any repaid capital because of these investigations that are going on to figure out why there's discrepancies. And here we go. During the period, a sum of 230,000 was drawn in respect of the joint liquidators' remunerations. So BDO is getting paid a hefty fee, and investors still continue to sit on their hands wondering when they are going to get their money back. So ongoing administration there. It's more wait and see what's going on. And a little bit of collateral news here. In Collateral, administrators take legal advice on deadline for investor claims. So they're basically saying they want to have a deadline for investors being able to claim in writing what they're owed. And they've highlighted issues with matching investors' funds to loans and recovering money that has been lent. So again, numbers are not really adding up in that, and this seems to be an ongoing issue. And obviously until this gets sorted out, then people cannot get paid anything back from the Collateral administration. So BDO is going to go to the courts and ask for a limit of time to where investors can provide proof of what they're owed. It has to be done with a certain timeline, because they want to start paying out investors with money that's been recovered, and right now they are not able to do that. Cufflink is working on implementing open banking. Okay, this is going to improve the efficiency, underwriting, quicken payments, and streamline processing. Yeah, this is, I think, is the future of the financial services, is open banking. It adds an additional layer of borrower verification in real time. So just going to speed up a lot of things, you know, with the loan process of underwriting, which is a good thing. So we had a peer-to-peer investing report that came out in July, and there's an interesting article about how it says a significant number of peer-to-peer lending platforms in the UK are now turning a profit. Let me see if I can zoom in this for you. I don't know if I can zoom it anymore. Maybe oops. Hang on one second. Where do you go? I'll just read out what's going on here. It says Funding Circle became profitable for the first time in the second half of 2020 2020, with the company's UK division making an operating profit of £21.3 million in the second half of the year. That's good news for Funding Circle. Zopa Group reported pre-tax losses in 2019, but the business profits for its peer-to-peer business ticked up to about £575,000, so they've been growing. Folk to Folk said it made $1.1 million in profit in its latest full-year results. That's a big jump because they were at about £198,000 profit for the previous year, so huge jump. Rolandex made a profit of $135,000 in the 12 months to the 31st of January 2021. I think that's supposed to say 2020. Reducing losses since inception to $5.7 million. So Rolandex, and we've talked about this before, heavily in the red as far as losses go, but they are trying to make a profit. Rebuilding Society, a small profit of $33,000 during 2020. Shojin Partners, $234,000 profit on £1 million of revenue after making an £830,000 loss in the year before, previous financial year. And Easy Money turned around its balance sheet, making a profit of $57,000 after posting a loss of more than £1 million the previous year. It's going to be interesting to see what the next accounts, because of what happened during that COVID economic repression, to see what these companies report for profit and loss during those times, because it's going to be a difficult time, I think, for some of these peer-to-peer lending companies. And see if there's any other good news. I mean, that is good news. It's positive because we want to see some of those companies posting a profit, and it's most of them have been in the red for a while. So good thing if you're an investor that it shows that some of these platforms can actually sustain themselves. FCA vows to strengthen high-risk investment marketing. That what they're going to do is really come down on marketing for what they consider to be high-risk investments. Question is, who decides what's high risk and what's not? I personally think some things are not high risk. The FCA may, but they're going to really come down on the way that these companies can market to the general public with their advertising and promotions. That may include peer-to-peer lending, I would imagine, and probably things like cryptocurrency. So the FCA strong-arming again, trying to protect consumers after it's made some real bad cock-ups on that side of things. This was interesting to me. Nearly 10 peer-to-peer platforms are collaborating on standardized metrics for risk. So this is Shojin Property Partners said, Jitin Ondiha said he's working with other platforms to come up with standardized risk metrics and terminology so investors can compare products from different platforms and diversify. I think this is a really good thing for the peer-to-peer lending sector in general, where there would be some standardized risk metrics that people could really understand. I know that Harry over at Cufflink has been working on something like this within Cufflink to really target and give a clear understanding to investors exactly how risky loans are. So for these platforms to come together and be on the same page in that perspective, I think is really a good thing. It doesn't state who in this article the platforms are, but it said we're working with some top players. Hopefully the first stage of this will launch in the fourth quarter of 2021, and maybe over time there'll be more platforms that come on board with this, so that's a good thing. Lendinvest has started trading on AIM. AIM is part of the London Stock Exchange, where it's really a market for small and medium-sized growth companies to trade on and to get revenue. Lendinvest is going to be filing this IPO soon enough, which value the company at about £255 million. So Lendinvest will raise about $40 million once they launch their IPO. But in the meantime, they are trading on the London's AIM. If you fancy having a dabble with Lendinvest shares, you can do that. Personally, not something I would go into. I think it's a pretty risky prospect. But having said that, Lendinvest is doing well. They're a profitable company, so If you really believe in them and you think that they're going to do well long term, maybe those shares would be worth looking at. I got the healthy shake today. Let's go through. Shojin Partners. I haven't really looked into this company, but I see a lot of news about them. I don't know if anybody there is investing through Shojin. What I didn't really dig about it was fractional online real estate, but again, that's from being burned previously with companies that have done fractional shares in property and just not really working out well. But maybe Shojin is better. It says they have a 12-year track record in this space, so could be something that I'll look into in the future. But they are doing a Series A funding to try to raise money to grow their business. So I don't know if that's going to be done through Seedrs or Crowdcube, something like that. What else we got here? This is the Lendinvest files IPO application, £255 million valuation. They're going to offer 21.5 million in ordinary shares at a price of 186p per share. Now, remember when Lendinvest did this, Funding Circle did this, a share price released at 441, and I don't know what it's currently sitting at, but it's definitely way off 441p. So if you are going to have a dabble in Lendinvest IPO shares, just be aware. Highly risky, good chance it can go like that. Could go up, could go down. We don't have any idea. So that will be released in the upcoming months. Shojin chief, again, Shojin keeps coming up in the news, predicts growth of blockchain and open banking in peer-to-peer sector. I think open banking is a given. Blockchain is a way for these companies to get access to financial records, also records on people in the future, and it'll be very fast and inexpensive. So he thinks that blockchain is going to be strong in the peer-to-peer lending sector. Of course, blockchain could include cryptocurrency payments, but I'm not sure if that is going to happen anytime soon. And our friend Harry Ramamurthy, I hope I said that right, Chief Technology Officer at Cufflink, has experience of mining Bitcoin. He said more education is needed on cryptocurrencies. Education is key. Absolutely agree. There's a lot of misconceptions right now, a lot of misinformation, a lot of undereducated people when it comes to cryptocurrency who don't really understand what these different coins are, what the difference between Bitcoin is and Ethereum and some on Litecoin. So there definitely needs to be more education in that space. But we are going to see blockchain not only be a big part of peer-to-peer lending in the future, but also I think generally in the banking region sector. Let's see, how long have we been going for to keep an eye on that? Because of course we always have to go less than 60 minutes. That never happens. Open banking, just in case you don't know, is a way for it's electronic record keeping, basically, where a lot of financial companies can check things like credit. They can do research on borrowers. They can get very fast access to database information that they can use to underwrite. So it just really speeds up the whole process of underwriting loans. What else we got? FCA questions if there is a space for new peer-to-peer consumer lenders. P-Land co-founder Robert Pascoe, who I've actually spoken to a few times, has revealed the difficulties of persuading the FCA that more peer-to-peer consumer lenders are needed. So what the FCA is basically saying, do we believe there is a need for even more peer-to-peer lending companies in this space, and are we going to grant authorizations for these new companies to operate? This is something that Robert is going through the regulatory application process, and he's showing that it's a difficult persuasion to let the FCA let them into the market space. Robert says FCA thought this has been and gone and there's no space for new players. Yeah, I mean, talk about shutting down the sector from growing if you're coming in and saying, we don't believe that there's any space for new peer-to-peer lending companies to come into the market. That's not really good. Pasco revealed that the city watchdog was shocked when PLend said it wanted to set up a peer-to-peer consumer lender. We had to push that. There is a different angle as we are using open banking data. The journey has been quite difficult as there have been a lot to overcome. So again, this is an example of open banking that Robert wants to use to check on the credit side of the borrower and make it fast. Pasco says that the platform will use more than 150 data points compared with 30 or so that other lenders are using by incorporating open banking technology. So again, one of the advantages of open banking is that there are more data points to be able to check on borrowers' background history and credit and all the different financial aspects that go into lending money to these people or companies. So they're having a tough slog getting authorized. We'll see what happens for PLend in the future. I think they'll get authorized eventually. So we'll see. What else? 11% of UK adults plan on buying crypto over the next year. Not a very significant story, but again, I think what you're going to see with the cryptocurrency space is as the prices start to take off again, more people will come in. Right now, people are sitting on the sidelines because they've seen this big market drop, a lot of fear, a lot of fake news out there in the crypto space. So once the markets start to elevate, more people will come in and those crypto prices will take off. FutureBricks repays lender capital early ahead of peer-to-peer lending exit. So FutureBricks decided to exit out of the retail peer-to-peer lending space, and they have repaid all of their retail lenders to give them an early exit from its live loans ahead of leaving the space. So that's a really, really good piece of news. Very positive that they've been able to transition from retail to business lending, but more importantly that they've paid all of the lenders back. Again, I'm just going off what this news story said. I don't know if that's 100% accurate. I don't know if anybody here invests through FutureBricks or not. If you've gotten paid back, just put it in the comments. And they're going to be focusing on institutional lending. Again, this is a lot of peer-to-peer lending companies are going to focus on institution money because they're finding that retail peer-to-peer lending is kind of a pain in the ass. JustUs founder defends Andrew Bailey on crypto concerns. Now, Lee Burkett, I know, is quite a big bull on cryptocurrency, but he has gone ahead and defended Andrew Bailey, who is the Bank of England governor. And Andrew Bailey has really said that he, of course, is very concerned about cryptocurrencies because they're dangerous and there's a huge enthusiasm for them out there. And there's a reason for that. I mean, Bank of England does not want you, again, to invest in cryptocurrencies for their own personal reasons. Once you take your money into things like decentralized investments like Bitcoin, it takes the control away from the Bank of England that it has on the financial system. And make no mistake about it, these big banks control everything. So of course they do not want you investing in Bitcoin, but they will use the narrative as well. We're here to protect, the consumers and the customers. Yeah, I can walk into a casino, which is, by the way, regulated. So it goes to show you not everything that is regulated is good. I can gamble on a website on horses or play roulette online. I can go into a casino and dump my life savings, all regulated. And the government's quite happy to let me do that. But when it comes to if I want to invest in something like cryptocurrency, to separate my money from central banks, because we all know that fiat currency is becoming worth less and less the more money that gets printed. Now the Bank of England all of a sudden is very, very concerned where I'm putting my money. Yeah, I mean, do the math there. Let's put 2 and 2 together. This is no coincidence that these news stories are going to come out. the Bank of England does not want you investing in Bitcoin. So yes, my stream may get shut down for saying that, but this is just the truth, and I have to speak the truth. But Lee Burkett is saying yes, he does defend Andrew Bailey, but purely for the fact that people should be educated about what they're investing in, which is important because we do not want people to put money into things that could be considered a scam. There's a lot of coins out there, more than 10,000 coins right now, and some of them, very scammy, probably not good places to put your money. So this is what Andrew Bailey is probably saying, but he wants a digital currency to be created by the Bank of England. I like what Lee says too in here about the banking system is way more corrupt than the world of cryptocurrency. We've seen this in the amount of fraud that happens within banking is a much larger percentage than the amount of fraud that happens in cryptocurrency or even things like money laundering. So, peer-to-peer cryptocurrency, this is going to be the future of banking, and you're going to see more digital coins being introduced by countries as a centralized digital currency. And as they try to really stamp out Bitcoin because it's decentralized, they do not want you investing in Bitcoin. Crowdproperty has overfunded their third round of Seedrs campaign. So let's see where they're at right now. Just a little bit over £1 million they've had of seed investments on Crowdproperty. So if you want to invest in shares on Seedrs, you can. Again, personally, not something I do. I am not an equity investor. I think it's quite risky because it can be difficult to actually make money on these things. And if you look on Seedrs secondary market right here, you'll see some of these companies have done really well, like Lambay up 2,150%, 3,355%. Revolut up 996% on the shares. But as many of those good ones as you have, you also have ones that are in the red. Look at this. mycarneedsa.com is down 99.5%. And then all the way down to minus 59%. So you can lose your money in these things. And then it doesn't look like there's as many losers as winners. But then you look at here, there is a lot of companies that have 0% changes. So the money, the prices of these things not moving also could be considered. There may not be much liquidity. You got 18 investors in this. In some of these companies, where did I see that? 18 investors in mama.codes. So a lot of these markets just not really moving. Of course, you got some in the green, but just be aware when you're investing in these companies. You got British Pearl here that was one of the companies that actually ended up getting out of retail peer-to-peer lending. So they raised £3.4 million. I don't know what the price really did on that. It looks like nothing. But yeah, just be aware that can be a very, very risky affair. I'm not saying Crowdproperty is a bad company or a good company to invest in through Seedrs. Just personally not something that I do because it's a little bit on the risky side for my taste. So this is the news that I wanted to show you about that came out a couple of days ago. There's a lot of talk in the US now about a housing bubble. We're seeing this in other places in the world too, where houses for sale, they're getting multiple offers, maybe 10, 15 offers on a house, and the prices are going for more than the price has been advertised for, sometimes 10, 20, 30, 40% more. That would lean to a bubble in my eyes. People are saying, well, it's lack of inventory that's the problem. But, when everybody is in a frenzy like that, it's probably not the time to be buying. So you've got, this is the one of the Fed presidents of the Boston Federal Reserve. He's warning about a potential damage from surging house prices as its purchases of mortgage-backed securities are coming into under scrutiny. So we found out a couple of days ago that the Fed in the US is purchasing at least $40 billion of agency mortgage-backed securities a month. And then on top of that, they are buying, here we go, you can see the news story here. The New York Fed, Williams, says both Treasury and mortgage purchases are supporting the housing market. Now, if this housing market pops, there is going to be a big problem, not only in the US, but it's going to be felt throughout other countries in the world, because this will probably affect the stock market. And once the US stock market goes into correction territory, it's going to have a ripple effect to the UK and Europe, which is always what happens. But down here you can see that they've admitted policymakers are discussing how and when to start slowing the Fed's asset purchases from the current pace of $80 billion a month of Treasury securities and $40 billion a month of mortgage-backed securities. So, I mean, this is insane. So the Fed is buying $80 billion a month of Treasury securities on the stock market. Once they pull the plug on that, and there's a question of when that's going to happen, it has to happen eventually, but can they afford to do that? I don't know. You're going to see some severe problems in the economy that will come as a result of that. And they're talking about, when are they going to start tapering this stimulus and then adjusting interest rates? But I don't think they can do that. And they're saying now that it's going to be a while before they even could consider doing that. And I think they're too afraid of the economy just dumping, Here's another report here from, who was it? St. Louis Fed Bank President James Bullard on Monday told the Wall Street Journal, "I'm a little concerned that we're feeding into an incipient housing bubble." This is very, very concerning stuff. And this money printing continues to keep happening. You're going to see the U.S. economy really in big trouble, which is going to ripple through the world. We saw inflation come out the other day at, I think it's gone up 4.2% versus last year. And things are just getting more expensive. Used cars are more expensive, and people are not making as much money. And the middle class is getting eliminated. So it's a big problem, and it's something to really need to pay attention to. And this is why I always say Bitcoin, Bitcoin, Bitcoin. To have something that is not tied to any government control is going to be a very, very important thing. Maybe it's not for everybody. If you don't believe in it, I totally understand. But if you're doing your homework, you're going to see how important it's going to be to have something that is not tied to government control, like gold, like stocks and shares, like money in the bank. You're hanging on to fiat currency like pounds and dollars. Inflation is going to chop away at your money every year, and it's going to become worth less. Now listen to this. Federal Reserve Chair Jerome Powell said progress towards full employment in the U.S., 2% inflation is still a ways off, hinting the Fed may not be on the verge of cutting bond buying stimulus. This whole situation is insane. The money printing is just out of control. They're at $28 trillion in debt. The UK continues to print in the same way. And we are all going to pay the price for this eventually. When, we really don't know. But really important things to pay attention to. It really can't be ignored in any way. And one other interesting story, the BIS, which you probably never heard of this, because this is the Bank of International Settlements, which is the central bank of all the central banks, right? They want to have, and this is something that the general manager came on live and said, we don't know who's using a $100 bill today, and we don't know who's using a 1,000 peso bill today. The key difference with the CBDC, which is going to be the central bank digital currency, is the central bank will have absolute control on the rules and regulation that will determine the use of that expression of central bank liability, and also we will have the technology to enforce that. So basically they just want to be able to control money again, because these are the rich, very rich, powerful banking system people that want to control everything to do with the monetary. Well, they actually already do. I mean, let's face it, we have no control over that. But what this is really happening in the background is, again, trying to stamp out things like Bitcoin that are completely decentralized way for people to invest in. And, they want to eliminate those types of investments so they can have complete control over the digital currency space and pretty much over world currencies and anything to do with the financial markets. The thing is, it won't work. They're not going to be able to stamp out Bitcoin because it is decentralized. Nobody owns it. And they're going to be fruitless in those attempts to do that as other countries come on board with things like Bitcoin, because they see, we're going to see Paraguay, possibly some of those other Latin American countries start to adopt Bitcoin as a legal tender, because they see that their currency is getting it's deflationary and it's becoming worth less and less, and they want to protect their currency, and they don't want to be tied to the US dollar. They don't want to be tied to these central banks that have control over everything. So yes, and also there's a great example of how we see just massive flip-flopping here. In 2019, this guy who is the general manager, his name's Carsten, said there is no clear demand for central bank digital currencies on the part of the society. There are huge operational consequences for central banks in implementing monetary policies and implications for the stability of the financial system. Yet, here we are 2 years later. Now, 4 months after that, he U-turned, saying that if there is a demand, or that there is a demand for digital currencies and it's coming sooner than we think. Data shows 67 countries are researching, piloting, developing, or have launched a central bank digital coin. So there's an interesting tweet here by Eric Voorhees saying, greater generalized central surveillance and an incorrect belief that by setting this up, the benefit of the Bitcoin and cryptocurrency generally is diminished. They want to be able to see what's going on and control it, but again, I don't think this is going to change anything within the Bitcoin market for people who know what's going on. Let's take a quick look at what's going on in the Trading 212 portfolio. We've had a bit of a drop here on crude oil. And as you know, we were very heavily invested in energy and oil stock. Had a bit of a pullback, but the actual stocks have really gotten hurt. And again, this is a problem with when you try to stock pick. This portfolio was doing great, right? We were at, you can see at the high, let me zoom in here a little bit. High point, 16,795 pounds. That would have been the optimal time to cash out if only the crystal ball from the crystal maze could tell me when that right time was. Of course, there was something in my emotional gut that said, you should probably just sell everything right now, go to cash. This portfolio has gone up. This is our starting point, funnily enough. 5,500 pounds was where we started investing in this portfolio. Now we're actually back to that point. I'll tell you why in a second. But you can see this is gone from 16,795 all the way down to the account value up here, which is 13,173 pounds. Now, again, obviously it's a great result. We've doubled the portfolio, more than doubled, almost tripled it. We were way over triple, but did not have the sense to cash out at that point and wait for a pullback, which is what has happened this week. And what I did was set some stop limit orders to set prices where I thought, if the prices start to fall to a certain degree, I'm going to just exit out some of the portfolio. So we'll leave a little bit invested here, but you can see right here, Bonanza Creek, we were up in the green. I can't remember how much, but you can see the price of this has gone down from $49 down to $40. So this has lost 20%, which in turn has put us in the red. And Centrus Energy were in the red 15%. Laredo Petroleum was our big holding, and one of the reasons why this portfolio has done well, it was up to 200% in the green at one point, but we pulled all the way back down to 129% in the green. You can see right here we're up at Laredo, look at this, from $96 we've lost 30% of its value, so down to 63 US today. And what I did was set some stop losses on that. I'll show you that in a minute. Lloyd's is still kind of staying steady. We've pulled out some of our cash on that. Microvision, there's just so little in here to really worry about, and all in, both in the red. And then Tullow Oil, which had been up in the green, up here at 65p, has come all the way down to 47p. So we really, again, this really highlights how difficult it is to pick stocks and get the timing right. The right way would have been to cash out when we were at 16,000 value of the portfolio, but of course didn't do that because I'm a knucklehead. And now we're going to sit on the sideline. We have 7,657 pounds in cash. I'm just going to wait and see. I think there's going to be some opportunities to hop back into some of these energy stocks as they maybe go further into the red. Again, that's just a guess. For anybody that uses Trading 212, a few people have asked me, how do you set a stop limit and what is that? So I'm going to show you very quickly how that works. So I can go ahead, say, to Laredo and hit sell here, and here are the different options for selling. You've got market, limit, stop, and stop limit. Now the ones that I think are important to pay attention to are market, which is, that's the selling price that the stock is trading at as soon as you hit that sell order. So if the market for some reason were very volatile and that stock were to drop 10% in 10 seconds or 5 seconds, you might not get the price you think you're going to get. But what I did is I use these stop this stop order here to sell. So you can go ahead and decide how much you want to put on the stop, and then you hit a price. It's like a price trigger. So let's say I wanted to start selling this if it hits $60. I would just put in $60, and I can choose when this expires, whether I want it to expire at the end of the day or GTC, which means good till canceled. Basically what's going to happen is if this price goes $60 or below, my sell order will become a market order, and that will become sold once that price hits 60, as long as there was a buyer on the market to take my shares. So that would become trigger. Now I did a lot of that for these shares a couple of days ago to try to just have some downside protection in case the prices fell, so I could at least liquidate out, have some cash sitting on the sidelines. Now you can also use this stop limit option here, which will set a price below the current price that will turn your order to a limit order. Now the limit order then is a minimum price you're willing to get for your shares. So you could set a stop price at say $60 US, then set a limit price at 59. What happens if for some reason the stock were to drop way below 59 and the order didn't get executed? Your stop limit order would not get executed. It would still be open. So this is why I prefer stop limits. I tend to think that if you're in liquid markets and you're not trading a very small stock, you're doing something bigger where there's a lot of liquidity, something like Lloyd's Bank or Laredo, BP, you could use these stop limits to set that minimum that you did not want your share to fall under. I think that's a good way. And you can see here I've gone ahead and you see some of these trades that I've done here that were stop limits. Actually, sorry, not stop limits, just stop orders that I'd set the prices for. You can see the price here on Bonanza Creek was at $41.10, and that got executed once the price of Bonanza Creek dropped below my stop price. And you can see here my fill price, this is what I was actually able to sell out at, was $41 and a penny. So only 9 cents off my stop price. Laredo, same thing, I had a partial fill right here. I set my stop price at $66.80, and then they were filled at $66.25, so 60 cents differential between where I set the stop price and what it actually traded executed at. And then the second one, again, $66.80, executed at $66.36. So you can see there is a small amount of a differential on that, and again, it depends. Let's look at Tullow Oil. This is a much smaller company, and you can see here, because of the lack of liquidity with Tullow, that the stop price was set at $51.80. That was the price I said I want to sell at that point. And you can see we lost another 1.5p on the fill price because it didn't get executed quickly. And there you go, 50p and 50.3p was where it got executed, but our price target was 51.8 or lower. So something you have to be aware of if you use limit stop sale orders and stuff like that. But you can see, so that's really where we are. And right now we've got about 5,500 invested and sitting in cash at 7,657 pounds. So still doing well. One other final thing that I want to talk about, and then if you have questions, pop them in the chat. We'll do a quick Q&A. I still getting questions this week about index trackers, you know, so all the time. Why are index trackers? Why would I not go to actively managed funds like Invesco? You know, who's that other guy? Fundsmith. And there was an interesting article. Again, it's a little bit older, 12th of September of 2020, but this article in This Is Money is saying more actively managed investment funds run by so-called experts rather than computers are failing investors more than ever before, according to a report published by analyst Best Invest. 150 investment funds, that's one in six of all funds scrutinized, have consistently underperformed markets over the past 3 years. And I think if you look further back than 3 years, you're going to see this is a long-standing problem that has been going on for decades, not just 3 years. The report says this represents a staggering 65% increase on the number of underachievers identified 6 months prior to that. So be careful who you invest through. This is why I say index trackers, you follow the markets, because some of these people are so-called experts are absolutely killing your investments. Here you go. You can see it right here. Again, this is back from figures to the end of June 2020. We've got some pretty big companies here. Invesco UK Strategic Income minus 34% versus the index that was minus 6%. So you see a 28% differential between what your index fund would have done, your index tracker, versus somebody picking out your stocks. And it just goes on. I mean, the worst one up here is minus 39%. Worse than the index is ASI Income Focus. We got Legal and General. We got Downing, St. James Place, Invesco, Jupiter, Janus, Lion Trust. I mean, BNY Mellon, Schroeder. It just goes on and on and on. And this, over a long period of time, again, this is why managed funds are so difficult to beat the indexes, because these wealth managers can't do it. They can't. They show it right here. It's in black and white. I believe this to be absolutely true. I think there's way more than this, some that are in the minus 10%, 8%. But over a long time, that is really going to kill you if you're losing 8% to the indexes because you're invested in a bum fund like an Invesco. Or God forbid you invested in something like the Woodford fund and lost some of your money in that. Then be careful. Be careful with these funds. Really, go to my website and look at that article on the front page, please. Please read that especially if you're a novice investor. Right here, this article right here about the best tracker funds, why you shouldn't be trying to trade stocks like I'm doing, why your index trackers are going to probably just do much better than any of these active funds. I updated the tracker funds information too. You can see here that the Vanguard US Equity Tracker, which I've been a big fan of for years, launched at £700 back in 2009 and is now launched at £100 in 2009, and July 13th it was priced at $704. So you've seen this go up 7 times, this tracker price, 7 times since 2009. That is the index. There is no buying and selling by some fund manager. You get an annual dividend yield of 1.17, small. It's not a fund designed to pay you income. But growth, what would you rather have? 5% in income or a 7 times growth on your money? Not to say this is going to continue to happen. We can only look at the past history, but this is a decent amount of time that we've seen this, and also the US index tracker has been around since the 70s, not necessarily this one in the UK, but it's been around for a long time, and it has generally beaten nearly every active managed fund. I think 96% of actively managed funds over the last 30 years. You can read all the data. It's all out there. It's in John Bogle's book of Little Book of Common Sense Investing. It shows why. The fees are super low. Look at this, 0.1% in annual fees. It's tiny. You're going to pay 0.2% a year, 0.27% fees on this fund per year. Not like some of these actively managed funds where you're paying 1.5, 2%, 3% a year. And you're just going to do better, I think, in the long run. So again, this is just another example of why these actively managed funds have really struggled. And even through this bull market that we've seen since mid 2020 onwards, these actively managed funds there's half of them that have not beaten the indexes, even in a bull market, even in the best market that we've seen in a long time. Only I think I saw a report in the US that 49% of managed funds have managed to either equal the indexes or do a little bit better. So I'm not a fan. I'm sure there's funds out there that have done well, but try picking them out is difficult. And you have to diversify. You don't want to put, if you see something like the Fundsmith fund, which has done well, you can't dump all of your money into that, because look what happened with Woodford. That was the big fund, right? A lot of people put all their money into Woodford fund, and now it's in administration. So you cannot put all of your eggs into one basket when it comes to these managed funds, because there is always that possibility that those funds can go into administration. With an index tracker, you never have to worry about that, because you own the index. You own every single stock inside of the indexes in the broad market, S&P 500, NASDAQ, and the Dow Jones. So you own thousands of stocks. You don't have to worry about that fund going out of business. It's not going to happen. So there you go. That's my little rant for today. I think I've gone on way longer than an hour. We're an hour and 4 minutes. I hope you found some of that information helpful. For those of you that are invested in managed funds, or you're confused about cryptocurrency, why you might want to do that. We'll see if there's any questions that are interesting, and then we'll go ahead and wrap it up. Oh, what the hell happened with the football? I was out there watching it. I couldn't believe what I saw. No, I'm not a football aficionado, But I saw the UK fans beating up on the Italians, and I'm like, why are they beating on them? They should be beating on the England players for not getting the job done, right? Don't beat on the Italian fans. So ridiculous. Very sad that England did not come through. Mark says, Housecraft bookkeeping, very similar to lending and funding secure and run by an ex-lawyer. Yeah, disappointing. Hey, Dan Barber is here in Hayfield in the high peak of Derbyshire. That sounds nice. Funding Circle shares currently 136p. Yeah, so there you go. If you invested at 441 or whatever the release price is, you would be down a lot. With open banking, do the financial companies have free uncontrolled access to all your bank accounts? No. No, they do not. Mem says, I got my investment back from British Pearl, but wasn't profitable after 3 years of being with them. Yeah, it's unfortunate. Yeah, lumber price is definitely high. Materials are high. Strange oil stocks are going down when oil prices are going up. Yeah, we're seeing this pressure. I mean, the crude oil prices dropped. I still think that there's a possibility crude can hit $100 a barrel by the end of 2021. But, you know, this trading 212 account was set up to trade. And so what I'm trying to do is to move in and out market time to see how much I can really profit on this portfolio again, so we can give some money to charity on the profits at the end. So being able to move out of the stocks when you see trouble ahead, and then being able to re-enter at a better price results in good profit on these things, these trading accounts. Very difficult to do. I've read that investment funds IFISA is flexible, enabling withdrawal and redeposit in the current year up to 20,000 max. So, are there any flexible peer-to-peer ISAs? Yeah, there are. I don't know exactly which ones. Assets Capital, I know, is a flexible one. Oh, yeah, Steve wrote that. So yeah, I think there may be on the peer-to-peer lending independent forum, there might be a ISA list that shows you which ones are flexible, but I have a article too on my website. Let's see if I can find it. I haven't updated it in a while. I probably should. See if the search. Here we go. Oh yeah, actually, if you go to my website, it's a little bit out of date, but we'll give you a good idea right here. I'll put it in the chat. Where's the chat? This shows you which ones are flexible. I put it in the chat down there. I'll show you right here. So just search ISA in the search bar up here, and then you'll get to this article. But you can see here it shows you which one's flexible right here. Just check with them because I want to make, I'm not sure if this is completely up to date, but Crowdproperty is not flexible. Last time I checked, Funding Circle not flexible. So you can go through that article. It has a list. Hopefully that will be helpful. Does a flexible ISA allow you to spread your 20,000 over several peer-to-peer platforms? The rules for the IFISA are a little bit strange. So you can only open one new IFISA per year for that current tax year, but you can use money from previous ISA years to spread wherever you want. So if you had money from, say, 2019, 18, 17, you could take that money and spread it across many, many different platforms. So what the flexible is, that doesn't really explain, what I explain is something different to what you're talking about. But a flexible ISA just allows you to withdraw from that particular platform and then redeposit on that one platform, but you still can't open more than one new peer-to-peer lending ISA for that current tax year. So I hope that makes sense. Yeah, as Catherine says, if you have previous year's ISAs, you can transfer to multiple IFISAs if they allow partial transfers, which most do. Yeah, you got to keep good records of that because it's kind of a pain and it gets complicated when you start moving. You got to figure out how much you put in on a certain year, which platform, so keep good records. Yeah, Debbie says Warren Buffett's told his family when he dies they should put their money into trackers. Very, very true. And Alan says Crowdproperty's IFISA is flexible. So there you go. Yeah, I think we're going to wrap it up. That's a lot of information today. Back here again next Thursday, all being well. I might take a little holiday soon. I don't know. There's talk of a holiday, maybe a week, maybe 4 days, but we shall see. So again, please hit that thumbs up, subscribe to the YouTube channel, and we'll see you again next Thursday. Thank you to everybody who supports the channel. One of the other things too, I people are always asking me, how can I support Financial Thing? Because obviously this information is free. But if you want to open up a peer-to-peer lending account, go up here to the Financial Thing website, to the cashback page, and you can score some cashback, especially good deals right now. And I also have to say thank you to Cufflink, who is sponsoring this YouTube video. If you're a new customer, you can get yourself up to $4,000 in cashback for new customers. Terms and conditions apply. Your capital is at risk. But again, go to the Financial Thing, to the page right here. You'll see my risk ratings. You can see the ISA options, and there's links here, for example, to Cufflink to sign up and get that bonus. Make sure you do sign up through the website link because that helps me out a ton. That is an affiliate link. You can sign up for LoanPad and any of the other companies you think you might want to look at. So yeah, that's one way to support. And yeah, that's it. So we'll see you next Thursday, all being well. Have a great weekend, everybody. Be safe out there. I know that the COVID cases are really ramping up in the UK, which is a shame. But be safe out there, be healthy, and have a great night. Talk to you soon.